Hey, good afternoon, everyone. This is Trader Tim from eminimind.com, and today I wanted to talk about what I look for at reversal points, or what I look for at points where the market might be trending one way and then may uh, be more likely to change direction. Lately, we've had quite a few of these bottoming tail days where over here on my left chart, the daily chart of the E-mini S&P, you see these, wicks at the lows that then driving price back up, whether we actually form a hammer at the close or just kind of price moves a little bit higher and we close without, a complete big body candle. We're getting these bottoming tails that are forming. And intraday, let's go to a 15-minute chart for example. We end up with these big moves down and then these big moves back up. And, you know, the question becomes, okay, well, how do we know if the trend down is going to just get a short-term bounce and then roll over and continue, or if the market is going to, break through its 50% retracement short on the day in this case because the move was down, and then the trend forming a new upward trend. And if we notice on today's example, once we broke the 60-1/8 of the short, we didn't actually make a full pullback into a long. So how can we kind of combat that, or what can we look for to place trades in these pivot areas? Well, you've probably heard me talk a lot about the nicey tick, and without going too much into the nicey tick, what I will say is that you don't always get a low tick that lines up with the low price. Let's say we did have a low tick that lined up with the low price, then seeing that as a potential, short-term bounce or even the low of the day is very likely. But in other situations, you're not as fortunate to have a low tick at lows or a high tick that lines up with highs. So what I like to look for is simply a break of the most recent swing high. So, for example, this morning, we're moving down and we're getting just one or two candles forming a little uptrend for 30 seconds or a minute and then rolling over. One little candle here and green candle, and then the market rolls over. And then, get a little bit bigger bounce, 4 or 5 candles, market rolls over. Well, once we break this larger swing high here, notice how then the market, when it pulls back, it does trade at its 50%, and we get a little bit longer term sustained bounce that trades to and through its negative 23% target, pulls back, and then bounces, again for at least a couple of points. This 96 down here trading all the way to 2600. But the key is to look for that break of the swing high. So the market's coming down, making these little swing highs, and then notice how this high over here is higher than the previous. It takes out the previous high, and that is kind of the signal that, okay, we could be, even if we don't have a low tick at lows, that could be the signal that the trend is, more likely to change, at least, in the short term, that you can ride it out for, if you get in a long down here at 93s, you take one contract off at the negative 23 and then just trail these swing lows on the way up. And, if you get a little bit lucky, you'll get into a reversal and, you get more than just a couple of points. This 93 today went all the way to 2605s. And just by trailing the swing lows down here, you're able to stay in the trade until about 2602s. And so that's a key, excuse me, about to sneeze, key element in looking for reversals um, when the market is kind of in this pattern of forming these bottoming tails. Now, if we go over to a situation like here, notice how this high broke the previous swing high, but the second half of looking for, the second half of this strategy is making sure that we don't just stop at the next short. So if the market is moving down, as soon as we break the swing high, the previous swing high, I want to draw up the next short. And if we do stop at the short, then I'll pass at taking the long. And if we go back to the other two examples here, where are we at? Right here. As soon as we break this recent swing high, I'm going to draw up now you could draw up from the next most recent swing high, or even the full. Either way, the market trades at the long first. It doesn't come up here and touch the short. If it did, if it ran right up, touch the short, then I would pass on the long. But in this case, the market does not touch the short, and so then that puts the long in play. And if we go, further into the morning, we can see how when the market does bounce and then trade right at the short, I'm going to pass on the long. Um, you're going to get into some situations where you can't, actually catch the bounce. Later in the morning here, we, got this little rally here. We didn't break the swing high, and then when we did, we didn't get a full pullback. So, you're never going to catch every single move, but at least as a filter to determine, is this a short continuation, or is this a time to buy? Waiting for that break of the previous swing high to jump into that trend change is what I'm looking for. And that same concept can be used in all kinds of situations. So, like, let's say early on in the day, the market is bouncing a little bit, but notice how we didn't, the trend is still down. We're getting a little bit of a bounce here, another little bit of a bounce. Notice how this is just a double top. This high did not take out the previous swing high. So I'm not looking at buying these longs, buying the long here. I'm not trying to, pick a bottom or catch the market as it's diving down. I want to see that movement above the previous swing high so that the signal is the momentum change. The break of the swing high is the signal for the momentum change. And so just kind of going throughout the day, when we have these patterns of bottoming tails, you can do the same thing for topping tails, but kind of expecting some midday reversals or late morning reversals. And so that's kind of what I'm looking at as I go through the day. Pretty challenging market to be trading. The last couple of weeks have been especially tricky, and so I've been treading lightly and being fairly selective with my trades. But we are at this apex of this big triangle, and so at some point, I'm hoping in the next week or so, we start to break in one direction or another. It's more likely at this point that we break to the upside, but if we do break to the downside, I'd be ready for that too. So I hope everyone has a good Friday and a great weekend. As always, next Tuesday, a live trading session, and you can catch me over at by email if you have specific questions, tim@eminimind.com. Thanks everyone, and have a great weekend.